Hey, so welcome back, folks. It's the 1st of October. As you all know, we have the closure of the US government, and that has led us into NQ all-time highs. So 1st October, we are trading into all-time highs. We have taken them out. So NQ has formed a new all-time high. I don't know, expect further prices higher. So what you have here is the daily time frame. What you're looking at is the daily time frame. If you're looking on the daily, you would want to have this on to show you the volume imbalances. Yeah, so you would want that on to show you the volume imbalances on the daily time frame. So for you to get accurate prices, you need that on. So yeah, today I made a video talking about what went through the New York session. So I have come back in the afternoon just to show you this move that happened trading into all-time highs. So this is the daily time frame, and note that when we are trading to all-time highs, you would want to look into the wicks and the fair value gaps on the daily time frame. So with reference to the wicks, as you can see, your wicks are marked out with quadrants. So what I mean by quadrants, you have the upper quadrant, which is the 0.75, and the lower quadrant being the 0.25. So this gives insight about these ranges in the wicks. So as you can see, we had all-time high right here, and this was an intermediate term high. We have a high, we have a short-term high, and the short-term high right here. So we expected the market to form this intermediate term high, and then we have a retracement back into these black candles which had wicks. So we had these discount wicks. We expected the market to drop back lower into the range just because it was overpriced, and expected it to drop lower. So as you can see, this week the market rallied above it. It closed on Friday 19th, and we dropped lower, coming back into half of that week, which pushed price higher to all-time highs, forming us our intermediate term high. And we dropped lower, we closed below the consequent encroachment of that week. Next candle opened up, traded back into the 0.75, as you can see, and we dropped lower into this week. So coming into that week, if I'm to draw quadrants on that, this week, you can see we hit the upper quadrant. Market hit the upper quadrant, and it was pushed back higher, leaving a new week. So if I'm to put this off, we formed a new week. So I'm referring to this week to anticipate this move going into all-time highs. So we put in a week, the market opened up, leaving us a volume imbalance. As you can see, this candle closed, the candle of Thursday 25th closed here. This was the closing price at around 24635.25, and we opened up at almost 24642. So we have a gap right there, and the market drops lower, coming back into consequent encroachment. Then we have a rally higher. The market fails to close above this candle's body, so this candle gives us an inside candle. So this inside candle gives sentiment, or this is, I would consider this accumulation of orders waiting for a manipulation to a move that goes to subsequent liquidity. So this was as we are having the start of the month, this was expected for us to trade into all-time highs for the beginning of this month. So what did 1st October do? So it's a Wednesday, we dropped lower, coming back into the volume imbalance we formed here, hitting the low of this, so hitting the top of this discount wick, as you can see here to the tick. We are going to drop on the lower time frame. So we have previous daily low as your draw on liquidity for this drop lower, and then we have previous daily high, because this was an inside candle. It had liquidity on both sides, so it left the liquidity of this day untouched, both sell side and buy side. That means we had a lot of liquidity down and a lot of liquidity up. Now what do you do in these type of situations? You have to wait and analyze, put in your time and price, and trust me, you'll be on the right side of the market. So if we are to drop to the 1 minute, my network is fucked up. If we are to drop to the 1 minute, right there, you have your, oh fuck, let me first set this. I need only 5 of these. The opening gaps, weekly opening gaps, I need maximum number. Let me put this at 2 or 3. Okay, let me give it 3. So this is the 1 minute time frame, as you can see. Let me put this off. So this red line right there is previous daily low, and as you can see, after previous daily low is taken out, so if I'm to consider the whole of this as accumulation, and this would be my manipulation move or the Judas swing, then we rally back higher back into that previous daily low. It holds the market, as you can see right there. It holds the market, taking us back into the premium wick that we had. I talked about that on the daily time frame. We had a premium wick marked up. So this is a manipulation move. This daily low holds the market again, and then we rally higher into, this is the lower quadrant of that premium wick. It holds the market, as you can see. We manipulate lower into that. How far can we manipulate into the previous daily low? It holds the market. We push higher, then we don't come back into that. Going into consequent encroachment, if we were to close, the market generates a move that fulfills these orders and satisfies them, pushing price higher. We drop lower into this low one more time. I talked about this in my previous video when I was talking about the New York session. So this is the New York session that I had in that video, and we take out this low, market takes out this low. This is all manipulation, and we are pushing traders to have the wrong bias on the market. So this was so easy for you to take sells instead of buying. And what happens after 10? So 10 a.m. opens the new 4-hour candle, and this can be also treated as an accumulation manipulation model. So we had our consolidation, we manipulated, leaving lows, this low and this low. Okay, drops lower back into what? The lower quadrant. We rally back higher into, let me zoom into this. Let me zoom back into this. We rally back higher above consequent encroachment of that premium wick on the daily. Then we sponsor a move going higher. We drop lower, coming back into consequent encroachment, but the bodies respect and fail to close below it, giving us a move that rallies higher into what target we are looking at, NQ all-time highs. So as you can see, I wanted to talk about the PM session because I think I already talked about the New York AM session. So the PM session trading, as you can see, I think I should start with the launch macro. Launch macro starting at 11:30 here, going into 1:30. So we shall be coming back for another lesson of macros. I won't be teaching about macros today. We have the New York AM session rallying higher after 10 a.m. going into the launch macro. We have time distortion right here. The market remains in that range. 11 a.m. opens up right there at that candle. Manipulate lower, forming the low of that 1 hour candle, and then the launch macro opens up. Launch macro takes us into liquidity or inefficiencies. So launch macro opens up, provides a fair value gap right there. You could take this being a bullish fair value gap. We'll have it right there, not consequent encroachment of that. We come back to the tick into this breaker, that breaker block, and then pushes price higher. So if I'm to draw you this like that, same thing we had in the New York AM session. If I'm to draw you the bullish breaker right there, there are a lot of confluences that we are provided. If you didn't take the breaker, we'll have the mitigation block, having this week, taking this week. So I do not expect the market, because of this mitigation block, I do not expect the market to drop lower, coming back into this black candle. I expected this fair value gap to hold. So my stop loss would be, my entry would be at that fair value gap. Stops at the second candle of the fair value gap right there. So I expected the market to remain in the upper half of that fair value gap, targeting liquidity. So this high would be your first take profit, taking off partials. Remember, no one is sure about the all-time highs. We had this high being taken out, we take it out, and we had this equal highs right here back in price. So that was a continuation move higher for the launch macro, and we continue going higher and higher in the launch macro, attacking these highs, attacking these highs right there. So if I'm to draw out this, so the launch macro attacks those highs. That was the major draw on liquidity for the launch macro. So the launch macro attacks those highs, and then what happens after we attack those highs? Time distortion. Time distortion, this is happening in the macro. So the macro, we say, is the last 10 minutes of this 11 a.m. candle. If I'm to say the macro for this launch macro, for this launch hour, the 11 a.m. hour, so 11:50 to 12:10, that would be my macro. So we have time distortion, and this is a new candle open. Sorry. So this is the end of the launch macro, you see. So sorry. So this is the end of the lunch macro. We're coming into a new session. So this is the PM session opening up. So the PM session, we have that high being taken out. So as we see the market is moving in one direction, we do not expect us to go opposite to what the market is doing. So I expect at this level we are having a suitable move to the all-time highs. So this can be measured on liquidity now. So just because we have reached this way up, it could be a strong draw on liquidity, because it's hard for the market to rally all the way into this range right here and then leave this and drop lower. So the PM session opens up, we drop lower into these lows. So the liquidity that was left by the lunch macro, after that drop, remember our model, the model I like most, the optimal trade entry. If I take my fib just like that, no trade entry, as you can see, so I have a low, a high, and a lower low. So for every candle that takes out this low, and that is only this, until I get a closure back above these levels, we'll close above them, and this will be my execution. So this would be my long entry. Stops at the 1 standard deviation, at the 1 fib level, 1 fib level, targeting what? All-time highs. Now this is a simple model to execute on. Like, putting in trades would be so simple, not looking at the overcomplicated stuff, fair value gaps, wicks, and I like that for price action that is hard to be recognized. But for if I'm not looking at that, I have my breaker right there. I'm having this order block. The market rallies higher and drops lower. This, I wouldn't consider this an inversion, because this is a premium PDR. Like, this fair value gap is already in premium. I wouldn't expect it to push price higher. So I'm looking at this fair value gap. The bodies of the candles respect that, will continue dropping lower, giving us a mohawk, but the bodies respect this. So I consider this as my bullish fair value gap for pushing price higher into the all-time highs. We rally above these candles open, making that a bullish order block. So this becomes a bullish order block. Yeah, so that is a bullish order block. We rally above, we come back into that one more time, we rally above into all-time highs. So we have a move that retests into a PDR. So I have this, making this a propulsion block, pushing us higher into that all-time highs. So I think that is it. I don't want this video to be long, as I already made a video in the New York AM session. I will look again deeper into that. We will venture deeper into the PM session later. Thank you for watching. Please subscribe and like.